Welcome back, navigators. In today's video, we'll see how trend-following investing strategies can potentially maximize returns by capitalizing on market trends and momentum. Imagine yourself as a surfer, poised on the edge of a massive wave, the sun setting behind you, the thrill, the anticipation, the sheer power of the ocean beneath you. This is what trend following in the financial markets feels like. Unlike the buy and hold strategy, which we covered in a separate video, this strategy is much more active and anticipatory. The stock market is a living, breathing entity with its own rhythm and pulse. Every tick of the clock brings a new wave of data, a fresh surge of information. But within the chaos, patterns emerge, trends. These trends are like the currents in the ocean, guiding the flow of the market. They are the hidden forces that drive prices up or down, the invisible hand that shapes the financial landscape. Like waves, they rise and fall, carrying fortunes with them. Some trends are short-lived, mere ripples on the surface. Others are long and powerful, like the swells that travel across the ocean, building momentum over time. Ignore them and you're left treading water. Ride them and you can catch a serious tailwind. You harness the market's energy, using it to propel yourself forward. This is the essence of trend following, aligning yourself with the market's natural movements. That's the power of trend following. It's not about fighting the market or trying to outsmart it. It's about going with the flow, letting the market's momentum carry you to your goals. This isn't about predicting the future. No crystal balls here. Trend following is grounded in reality, in the here and now. It's about making decisions based on what the market is telling you today, not what you hope it will do tomorrow. It's about recognizing what's happening right now, being present, being aware. It's about seeing the market for what it is, not what you want it to be, seeing the market's direction and moving with it. Whether the market is going up or down, trend followers adapt. They adjust their strategies to align with the prevailing trends, always staying one step ahead. Trend followers go with the flow, capturing profits along the way. They ride the market's waves, taking advantage of the opportunities that each trend presents. It's a dynamic, flexible approach to investing. To discover more, it is important to acquire knowledge from the best. Try William O'Neill's How to Make Money in Stocks, a must-read encyclopedia. Also, take a look at the principles developed by Nicholas Darvas in How I Made $2 Million in the Stock Market. And do not overlook the podcasts, videos and books with the teachings of Mark Minervini, David Ryan, Michael Covell or Jesse Livermore. You can develop the skills and knowledge to recognize when a trend is forming and position yourself to take advantage of it. It's all about timing, about being in the right place at the right time. And when you do catch that wave, the ride can be exhilarating. That's what we're going to do here. We're going to learn how to read the market's waves, how to identify the trends that matter, and how to position ourselves to ride them to success. It's a skill that takes time and practice, but the rewards can be substantial. This isn't some get-rich-quick scheme. Trend following requires patience, discipline, and a willingness to learn. It's about playing the long game, about building wealth over time. You need to be dedicated, to put in the effort to understand the market and its trends, but the effort is worth it. What about the rewards? Let's just say the view from the top of that wave is pretty spectacular. When you successfully ride a trend, the sense of accomplishment is immense. The financial gains are just the icing on the cake. So, are you ready to dive in? Are you ready to embrace the power of trend following, to learn how to ride the market's waves to success? Let's get started. In the world of investing, recognizing profitable trends can be the difference between success and failure. It's about understanding the market's rhythm and knowing when to act. The first rule of trend following: don't fight the tape. This means respecting the market's direction and not trying to impose your own will on it. The market has its own logic, and it's crucial to align with it. The market is telling you a story. Your job? Listen. Every chart, every price movement, every volume spike is a chapter in that story. By paying close attention, you can decipher the underlying narrative. We're looking for clear, decisive movements, not blips on the radar. Consistency is key. A single spike might be an anomaly, but a series of movements in the same direction? That's where the real opportunity lies. Think of it like a herd of cattle, a few strays wandering off, that's just noise. But when the whole herd starts moving in one direction, that's a trend. This analogy helps simplify the concept, making it easier to grasp. We want to be running with the herd, not against it. Following the trend means you're moving with the market's momentum, increasing your chances of success. There are tools to help us spot these movements: charts, indicators, technical analysis. These tools are like the compass and map for a navigator, guiding us through the market's terrain. Don't let the jargon scare you. It's just a way of reading the market's language. Terms like moving averages and momentum indicators might sound complex, but they are simply tools to help you understand market behavior. Look at the behavior of the stock price around key moving averages, 20, 50 and 200 day. Understand the chart patterns developed by the above-mentioned investors and be in the market for as long as the trend stays with you. Learning to spot support and resistance levels, moving averages, momentum indicators. These elements are crucial in identifying the strength and direction of the trend. These are our signposts, pointing us in the direction of the trend. They help us navigate the market's ups and downs, providing clarity in a sea of data. We're looking for assets that are making higher highs and higher lows. That's an uptrend. This pattern indicates a strong, sustained movement upwards, which is what we aim to capitalize on. Conversely, lower highs and lower lows indicate a downtrend. Recognizing this pattern helps us avoid potential losses by steering clear of declining assets. Also, learn how to use stop-loss orders and apply this knowledge with consistency. Sounds simple? It is. But simple doesn't mean easy. The market is a complex system, and while the principles of trend following are straightforward, applying them consistently requires skill and discipline. It takes practice, patience, and a keen eye to separate the signal from the noise. Developing these skills is essential for any successful investor. But master this skill, and you'll be well on your way to riding those waves of profit. With dedication and the right approach, identifying profitable trends can become second nature, leading to consistent and substantial gains in the market. That's all for today. Until next time, take good care of your finances, navigators. And don't forget to subscribe and share if you found any value.